Welcome into a brand new episode of WSI TV. Enjoy the show.
Welcome back to another brand new episode of Bishop's Move here on WSI TV. I'm Jordan Bishop and I'm joined by Taylor Klinkbill. How are you doing, Taylor?
I'm good. How are you, Jordan?
Good, thanks. Now, before we jump into today's content, as always, I want to tell you to go over to WSITV.com. Make sure you sign up for the free daily newsletters, and of course, you'll get instant access to the WSI Vault. So Taylor, why don't I pass it off to you to explain what we're getting into today?
Yes, of course. So today we're going to be talking about how to trade when other investors are kind of panicking. We have been talking about the past couple weeks and the past couple months really that Wall Street and the market have been doing really well. But that being said, everyone's kind of doing that thing where they're like, this can't last.
Right.
The panic is setting in. People are freaking out about a downturn. So we're getting recommendations from all over the place. You've got people saying go to your safety trades. You've got people saying put all your money in the market. Mm-hmm. And there's just a lot of confusion out right now. And we even have a quote that I have up behind me that Wall Street can't keep up right now. Right. So we're trying to kind of get through all the madness right now and figure out what's going on.
Yeah, absolutely. I mean, it's strange because as far as we know, there's plenty of good picks out there. We
Yes.
are, and if you're a premium subscriber, you know about the picks we're putting out lately and how well they're doing. So it's great to know how to trade when people are, panicking or fearful, but it's also, you don't need to always look at what they're doing, which
Exactly.
I mean, we're going to get into today anyway. So Wall Street can't keep up. That's the headline of the week from Yahoo Finance then. So yeah, the markets, as you probably know, are at record highs. They just keep going and going and going. There was a time where, if I didn't use my investing experience and I looked at the market, I probably would have thought China's going to kill this market, or the China trade deal was going to kill this market.
Yes.
It didn't care. It didn't care about Iran. Didn't care about any of that. And here we are sitting on record highs.
Exactly, yes. So yeah, we've got it's just crazy at this point. We've seen record highs in multiple different indices, not just the S&P 500, but general stocks are hitting record highs for specific companies. But so of course we have people around us and everyone on the media and all the news are saying, oh, well, we're going to have a downturn, we're going to have a downturn. Well, we've been predicting a correction for quite a while now,
right.
Which it's a healthy thing, is like I think Jim talks about it probably more eloquently than I do, but it's a healthy thing to come back to support levels, and so we're kind of expecting that at this point.
Yeah, we are. At the same time, though, we're not sitting on our hands, are we?
Exactly.
So a correction will eventually come. Who knows how big, if it'll be devastating, but it's always healthy for the market to come down. It doesn't move in a straight line.
Exactly.
If you look at it over 100 years, then it always goes up. But we're not around for 100 years to capitalize on those profits. So it's all about timing,
Exactly.
which is something I, believe we do very well. I'm biased a little bit, but I'm sure a lot of our viewers would agree with me there. So yeah, we're sitting on a record high. People want to buy low, sell high. So they're waiting for their opportunity. They're looking for opportunities to get in. But again, there's still sturdy picks out there that we're looking at every day, of course.
Of course.
So the big question you've got for us here, Taylor, is what should you do when a trade correction looms? What's the answer?
Safety trades.
Exactly.
That's where everyone's going to be jumping in as soon as they see that downturn, whether it's huge or a tiny dip. People are very quick to react on things like this, especially when tensions are so high because we're running so high in the market.
Right.
But so short or long term, it's a good choice to get into safety trades. You may not have, the majority of your portfolio won't necessarily be in these trades like gold and bonds all the time, but you should have some of your portfolio in it, just no matter what the market is doing. But right now, you could really capitalize on the people that are terrified of what's going to happen in the next couple weeks.
And the way I like to look at it too, just to sidetrack a little bit, is I like to look at it as a slider in my portfolio. So when times are good as they are now, I'll bring that slider right back down. My safety trades probably take up 5, if maybe 10% of my portfolio when times are good. And then when things start to turn, when we actually see we don't want to predict a correction and then act on as if the correction's coming
Exactly.
tomorrow, right?
Yes.
So, but we just want to be prepared. So
Yes.
when we do see that tipping point, and you've got a great trade here today that we'll get to, but when we do get to that tipping point, I take that slider of my 5-10% and move it up,
Exactly.
So, but of course, it's always good if you don't have any of these safety trades in your portfolio. You want them in there because
Yes.
if the market can react like that, you want that protection.
Exactly.
It's almost like insurance.
Yes, for sure. Yeah, and like you were saying, most of the people that are the majority of people that are investing in the stock market, whether they have a hedge fund manager or they don't, they do things in extremes. Usually there's all or nothing. And it's not like the logical way that you just explained it. It's fear. And people are going in very large quantities one way or the other.
Yeah, absolutely. And I mean, you've got that you can purchase bonds,
Yes.
right? When everyone's fearful, purchase bonds. And again, just going back to what we just said, you should have bonds in your portfolio. But you don't have to go and buy, we're going to talk about 20-year bonds here. You don't exactly have to go and buy a bond and wait 20 years because who can predict where the market's going to be 20 years from today? I mean, we could be in another bull, we could be in another bear, could be sideways. Meanwhile, bonds do pay out in the meantime, but you can't necessarily or you can't easily get out of them like that. So there are certain tricks here. Just before we get to the new pick we have for everyone today, you can trade TLT. That's the ticker. That is the 20-year bond, and that's completely liquid. You can get in today. You can get out tomorrow.
Exactly.
You're just trading the price of the 20-year bond. So that's just that's basically if you're just hopping along, you should have TLT in your portfolio. You don't have to wait that long. But that's not our pick for them today.
No, not today. No, today we're going to be using something called leverage. If you're not familiar, it is a way that you can purchase a fund and you can kind of double or triple, depending on what kind of fund you're looking at, the profits or the losses in that fund. So it's really helpful on the good side. And if you're playing your cards right, even if there's a downturn, you're doing well too. So
right, exactly. And just to explain a little bit about how we're using leverage, we're not talking about options here.
No.
Because that's a great way to use leverage if you're extremely precise. You always really want to be precise when you're using leverage. So say if you're in TLT, you want that in your portfolio just to sort of like, just as the foundation, right? TLT and gold and what have you. But when things are going well for, say, the bond market, you can use leverage. You can use 2-3 times ETFs, and that really magnifies your gains by that 2 times and 3 times ETF. So you don't want to take that 2 times loss though.
Exactly.
So it's all about timing, and I think we're talking about that right here a little bit. But you have is it a 2 times of TLT here for them? Yeah.
So the one right behind us, the ticker is UBT. I'm not even going to try to read the name because I can't see it, but it is the the 2 times leverage for the 20-year bond index. And as you can see, it's a pretty strong chart in the far right corner, and we're nearing that entry point that you and I kind of look for, that we hunt for in charts like this. And so it's at that like tipping point where you don't really know what's going to happen with the market. We may have another week of record highs. We may have a correction next Monday. We have no idea of predicting that. But if you are not sitting on your hands and just being cognizant of what's happening in the market, you can take advantage of trades like this.
Right, yeah, and I would say this UBT has hit the buy point a couple times already in the past few months.
Yes.
You could have got in back there in, I want to say that's November. Around the $95 mark would be a good entry point, I think, for this. So it's a little high right now. It's at $99. I'd be, I don't think it's too high to get into right now. I'd be looking for it to come down to 95. But then again, you're chancing that the market is going to go higher for a few, I would say, maybe a week or two, which could absolutely happen. But all we're doing here is, we're saying we see a correction coming. We're saying we see bonds, we foresee bonds taking off.
Yes.
We're just listening to what the market's doing, And this is a great trade because once you get that signal, you get in and you make 2 times what TLT does, what the 20-year bond does, which is great because bonds are also slower with this movement.
Yeah, there's not quite as much fluctuation there.
Exactly, yeah. So that's a great pick right there, and that's a great looking chart as well. So let's break down the details of what a 2 times leveraged stock trade, bond trade means.
Yes. So I mean, it's really simple, simpler than you probably might think. If you're just trading the regular TLT like we were talking about earlier, you make a 23% return from a low point to a high point. It was just one that we saw in the past couple of years that I tracked for you. It was a $1,900 profit, which is not bad.
Yeah.
It's pretty good, especially for bonds, seeing as there's not that much upwards movement when we do get it. But with a 2 times leverage fund, like the one we just showed you, UBT, you make 46% instead.
Right.
So you literally just double that.
Yeah. So I mean, that's great putting it in terms, because I mean, we can talk about 2 times and leverage all we want, but the bottom line is you could have had a 23% gain or a 46% gain.
Exactly.
I know which one I'd take.
Yes.
I'm sure you'd follow the same the same trade there.
Yes.
So it's actually, you know, it's incredible what it can do. Again, being careful, because to the downside is magnified as well. But
Exactly.
we're here to guide you and
Yes.
to make sure that we're timing this right. And yeah, leverage is a good thing when you use it correctly.
Yes. If you know what you're doing, it's kind of like there to help you. It's one of the better kept secrets, I want to say, of the stock market for someone who's not really well versed. So we're going to continue to watch the market, and you'll be the first to know if we come across any other trades like this. But again, like Jordan was saying, it's just timing. It's about what's going on in the market right now and what's best for you. And so I think that's what we had for you today. But
yeah, absolutely. I mean, a great episode you've brought here today, Taylor. Leveraged anything is a great tool, again, in the right hands or with just the right information.
Exactly.
Again, which is why we're here to talk about it. So yeah, exactly. UBT, great 2 times 20-year bond ETF there that you can trade in most trading accounts. So
yes.
Yeah, well, thank you so much, Taylor, for bringing this to our attention today. We'll talk to you next time.
Thanks for watching the latest episode of WSI TV. Be sure to visit WSITV.com, where you can subscribe for free with no contract and gain instant access to the secrets of self-made millionaires via the WSI TV Vault. So go ahead and claim this gift for free now at WSITV.com.